Hey, hi, everyone. Very happy to see you all here. If you're wondering why exactly you have been transformed here and what is going on, it's the Dukascopy Research Team covering the UK manufacturing PMI data release, which will be out in about 10 minutes. And as you can see, yeah, my colleague Michael will join us very soon. And as you can see, the current at the current moment, the forecast stands at 51.3, and the prior figure stood at 51.5. Hello there, everyone. Hello, hello, hello. Yeah, guys, you're very welcome to post your messages in the chat section as well in case if you have any comments or questions. You're very welcome to send them also, and we'll be happy to communicate and to address them. Meanwhile, I'll get back to the UK PMI. So for the 24 hours to 23 GMT, the sterling fell 0.21% against the greenback and closed at 1.5126 as UK GDP numbers could not provide any surprise. Data showed that Britain's economy grew at seasonally adjusted rate of 0.7% in Q2, in line markets forecast, and its preliminary figure, however, its yearly rate was revised lower to 2.4% from the initial estimate of 2.6%. Meanwhile, the nation's total business investment rose 1.6% in the second quarter compared to a previous estimate of 2.9%, while the index of services print for the 3 months ended July grew 0.8% from 0.7% rise registered in the early 3-month period. Okay, let's move on a bit further, and I would like to show you guys out there the top 10 economists from different banks and economic institutions. You can see them over here in the chart. Projections on the upcoming data release on UK manufacturing PMI. And according to their views, we have the Bloomberg survey summary where the median estimate stands at 51.3, average estimate stands at 51.4, high estimate stands at 52, and low estimate stands at 50.8 respectively, whereas the number of estimates this time has reached 27. And continuing the projection part, I would like to quote Amar Goodwill from FX Street. All eyes are now on the UK manufacturing PMI, and the cable has declined for 10 consecutive sessions, and only an upbeat UK PMI report could lead to a meaningful technical correction today. Once again, the devil lies in the detail. Apart from the headline figure, the trading community would be interested to know whether the new export orders continue to decline in September on the back of sterling exchange rate. For almost 6 months now, the PMI reports have been highlighted as the inflationary impact of the strong sterling. New export orders have dropped each month as well. Hence, it's hardly surprising if the BOE turns dovish, especially since the China slowdown and financial market turmoil have gathered pace of late. Furthermore, dovish, that also means the BOE would delay its own rate hike, obviously. Conceptually, a weak PMI figure could spell disaster for pounds, sending it lower to 1.5 levels ahead of the non-farm payroll report due tomorrow. On the other hand, a much-needed technical correction could be seen in case the PMI beats expectation. A corrective rally, according to the FX Street, to 1.52 till 1.5248 could happen quickly. We'll see what comes next. Yes, and now since I have only 1 minute left, I would like to also provide you with the your colleagues, their community members, and their poll, their expectation based on the poll on their impact on sterling US dollar currency pair. As you can see, the traders are a little bit more to the bullish side, 51.72 versus 48.28. And we have a couple of comments. For example, Ivan is saying that regardless of which is less than the current number, he's sure that this expansion from for British pound, and this will push the price up reading. And interesting fact that from May 2013, the British manufacturing PMI consistently is the above 50. Yes, I guess that pretty much covers the fundamental part of the economic data release, and I would love to invite Michael on the whiteboard to cover the technical.
Thank you, Paulina. Good morning, everybody. So, for today's data release, we have the cable currency pair, since it is likely to have the largest reaction, if we are gonna see a reaction today. So we have the negative price variance strategy, and of course the sell market, since we're expecting the data to be slightly worse than anticipated, and therefore the sterling to decline against the US dollar. So, however, the sentiment for the given currency pair is bullish at 59.49%, with the sterling being sold in only 36.69% of all cases, which is not a lot. And the US dollar being bought in slightly the majority of all cases at 50.32%. So, concerning the pending orders, 53.70% in the 50 pip range are to sell the sterling, and in the 100 pip range it's almost 51% also to sell the British currency. So, concerning market sentiments of other market participants, you'll see that they are all bullish, supporting our sentiment, with Oranda having 60.31% of long positions, Saxo Group has 59.10% of long positions, and 71%, almost 3/4 of daily fixed traders are also long the British pound. So if we move to the market reaction table, where we can see the reactions for the previous 5 data releases of the UK's market manufacturing PMI. For the sterling, the largest reaction was 62 pips in the last 5 months, and the smallest one was only 9 pips. So the approximate average reaction that we calculate from this data is around 32 pips, and we place the take profit and stop loss levels accordingly, with the stop loss level located around 1.5176, which is quite close to the trend line, which has lasted for approximately 9 days, so since last week, and the cable has struggled to breach this pair. So in case we do see an improvement in the manufacturing sector, the pair will most likely not be able to cross this this line. So this is a quite strong resistance, and the stop loss level is located at 1.5112. Yeah, the survey is quite low, but you know, the data tends to surprise or to disappoint, and I believe we won't have any reaction today, or just a really small one, but we'll see. Anyway, the take profit level is located at 1.5112. We have the Bollinger Band close by, also the 4-hour S3, so this is a quite strong support. So in case the data is a lot worse, if it goes below the 51 level, we will probably see a decline towards this area and possibly even lower. And yeah, so we have like around 45 seconds to go, and let me mention the technical indicators, which are giving us bearish signals in the 10-minute time frame, neutral in the 30 and the hourly ones, also bearish in the 4-hour ones, also again neutral in the daily and the weekly one, and distinctly bearish in the monthly one. But as usual, the most important one is the 30-minute time frame, since it was updated specifically for the given data release, and unfortunately it cannot help us predict what is going to happen with the exchange rate, since it's giving us mixed signals. So maybe we will see no reaction, as I personally expect. And also the focus is mainly on the US manufacturing PMI today, since with all the Fed rate hike. And yes, we can see the data is slightly better than anticipated, and hence we don't actually see a reaction as I expected. It's only 2 pips right now, so it might go slightly higher in the upcoming seconds. So yeah, approximately 10 pips, 10 pip reaction. We didn't reach neither the stop loss nor the take profit levels. So I'd say there is nothing out of the ordinary here, and quite a dull data release, but it happens. So I believe that is everything from my side, and back to you, Paulina.
Thank you, Michael. Yeah, in fact, we do not see any significant change in terms of the numbers out there. Well, you know what they say, no news is good news. We'll see what comes next. Stay tuned, because right now there will be a continuation of our community members' new energy webinar on binary options Forex. Some interesting insights, some interesting tips. So make sure to stay. And tomorrow at 12 GMT, your beloved Dukascopy Research Team is going to have another edition of Friday 12 GMT webinar. Also, don't miss it. Meanwhile, Vilko, you are very welcome to give back and proceed with the webinar. Thank you very much, guys, and we'll see you very soon. Bye.
Thank you, team. That was some great coverage. Perhaps some dull numbers, but we get some movement out of it, and we as traders do like that.